So, welcome back to our podcast at home on the Lake Shore, where we talk about home loans with our local home loan experts at UnitedOne Credit Union. My name is Mike, and this is our 11th episode. So, we want to welcome back in our home loan experts, Linda, Carrie, Julie. Good morning to all of you.
Good morning.
Good morning.
Good morning.
Yes. Here we are. We're getting towards the end of summer. Things getting back into swing with kids going back to school, football, preseason, things like that. It won't be long and they'll be playing for real here very soon as well. So hopefully that fall kind of, you guys ever get that feeling of fall in the air sometimes? Hopefully that's still a little ways off for us. I'm not really ready to give up on summer just yet. How about any of you?
No,
I'm ready.
not at all.
I'm a fall person. Bring it on. I don't like the heat.
Oh, Carrie, but you know it comes right after fall, though, and none of us really want the winter, do we? We don't want that.
I like the seasons. I guess that's why I live in Wisconsin. I would be bored if I lived somewhere where it was warm all the time.
Yeah,
I
boy,
like
it
the
would
change.
sure get old if it was 72 and sunny all the time. That would
It
just
makes you
be the
appreciate
worst.
summer to live in
That would
Wisconsin.
get old. Although I do like nights with sleeping with the windows open.
Yes.
Yes, and there's something about fall, you get your bonfire season, your campfire season, you get out the hoodies and the leaves change, and you can still have those nice days where you cruise up the road or go to some of those small towns, do a little shopping or just visiting some of those towns, and sometimes it's just neat to kind of hit the open road that way, which is always seems to be more fun to do in the fall time to me. It just is kind of nice that way. But I don't want to give up yet on summer. It seems like it took summer a while to get here, so I don't want it to go running off just yet. So
I agree.
So today on tap for today's discussion, we're going to be talking about FHA loans, Federal Housing Administration loans. But before we dive into the meaty innards of an FHA loan and get our experts' thoughts and opinions on those, it is time for everyone's favorite part of the show, especially Julie's. It's the Julie's joke of the show.
All right, with approaching fall and back to school, what is the smartest bug? Anybody?
No, what is it?
A spelling bee.
Oh boy.
Good one, Julie.
I'm sorry,
Yep.
that one buzzed right by me there. I didn't have a guess on that one.
Yeah, that happened.
Oh, okay. I mean, sometimes you got some real doozies, Julie, and other times you get a few groaners. I don't know about that one. We'll have to see. We'll have to see what our listeners say.
Yeah, I'm sure this is what they wait for every month.
Yes. Oh, well, now that we got those pleasantries out of the way and we're ready to dive into today's topic, let's take a look and have some discussions about FHA, Federal Housing Administration loans. Who wants to lead us off with this interesting topic?
Let's not all talk at once, huh?
It must be that exciting. You're all speechless.
I'll start. FHA is a program that helps out people who may not otherwise be able to get approved for a home loan. It's a good go-to program if maybe you have a few credit issues or things that make your credit score less than perfect.
Yep, it works through, like Carrie said, if there's some collections or maybe a payment or two that's been late, it's more forgiving. It does allow lower credit scores. We do have two options for FHA. When we say options, it means two servicing companies that work with FHA. One is Servion. Again, it gets sold on the secondary market, and the other one is WIDA, the Wisconsin Housing Program. And what the plus with WIDA is you can use down payment assistance still with an FHA product.
So you can combine their powers, so to speak.
Yeah.
Correct.
So I know an FHA, besides the credit that we're able to use a little bit lower credit score, there is some guidelines that we have to abide by, but you also can only have one FHA loan per time. So if you already have an FHA loan and then you're wanting to buy a second property, but you're keeping the other one, you can only have one FHA loan for yourself. So you either would have to sell, refinance that one to get another FHA loan. Another thing too with FHA, if you're not putting 20% down, there is private mortgage insurance that we have to have on that. The one thing with FHA is that they help you out by doing what's called a MI upfront. So you are going to be paying upfront some of that private mortgage insurance, adding it onto your loan. So your monthly private mortgage insurance is less because you already paid some upfront. So that's a good thing with FHA is your payment is probably going to be a little bit lower than having the whole private mortgage insurance included within your payment. So I know that's a lot of private mortgage insurance information, but that's why we're here. We can explain all of that to you.
And the standard down payment for an FHA loan is 3.5%. So at least it's a minimal amount. And like Julie said, if we go through the WIDA program, if you meet those income criteria, you can use their easy close second mortgage to help out with that, or other down payment programs to help out with that money that you need to come up with.
A nice feature with FHA is if you do have history of maybe a bankruptcy or a short sale, they are willing to work with you and get you back into home ownership sooner than a standard conventional. Like if you have a bankruptcy history, they'll look to help you again after 2 years versus conventional is 4 years. Same with student loan debt. That's always a hot topic right now is student loan debt and what we have to use for payments. Even though a payment may not be reported on your credit report, or you may say, no, I'm in deferral, we still know that a payment eventually is going to be required. Most mortgages, most loan applications will figure 1% of the balance as a payment. FHA is 0.5%. So sometimes that can also make a difference when we're figuring out what your affordability is. If it can get away with just using 0.5% of that student loan debt.
Okay. I have a question for you. Since the FHA, obviously it's a government, it says Federal Housing Administration in the name. Does that impact at all the purchasing process or that buying process? Does that lengthen it, shorten it, or what changes does that do from like a traditional home loan or just your standard home loan if you're going through the FHA program?
Timelines are about the same.
Right.
Everything, when we work through things, of course, we want you to get things in as soon as you can. So the process goes a little faster. Sometimes we're just waiting on third party people. So like appraisers, title, those third people that are doing things on your behalf or on our behalf for you. We're just, waiting for them to get back to us. But, the timelines are the same. One thing that I mentioned is we're waiting on third parties like an appraiser. FHA is just a little bit stricter on the property. Some of the things that they look at is one, they're protecting you. They're protecting us, the financial, but they're really protecting you. They don't want the house to have any peeling paint. That could be hazardous to you or kids or, that. So they're making sure that they don't want any of that. Handrails. They don't want anything missing, anything that's going to be hazardous to you as the person who's going to be living in the home. They just want to make sure that all of those things are taken care of. So an appraiser may note those on the appraisal. And then that's when we look at it, if we have to, touch base with you and the listing person to have them take care of some of those items. And again, it's not that they are, being picky. Really, they are really securing this house for you as the borrower.
What I always tell our borrowers is they're very strict with safety and soundness because they know that maybe credit is the riskier piece that they're taking, but then they want to make sure that the house is safe.
Another thing that's a little different with FHA is private mortgage insurance, which is insurance that protects the lender, and you pay if you're not putting down at least 20%. That will stay on for the life of the loan.
Yes,
it doesn't
thank you, Carrie.
automatically drop off when you build up 20% equity like the other programs. So some people choose to take out an FHA loan to get a house sooner than they could otherwise, but then you can always look at refinancing later on when you have more equity in the house and maybe you've built up your credit and things are looking better and you can get approved for a conventional loan. You can always switch over to another program.
And that's when we are here to help you with that. We will educate you on your credit and say, yeah, let's get you to the house right now. But, in the future, when you're making payments on time or whatever it is that we look at in your credit, we let you know, let's work on these items and then come back and let's see if we can refinance to get you into a conventional where you wouldn't have to pay PMI anymore or very little PMI because by that time you've had some equity in your home too. So those are some of the things that we, try to help you with too. Another thing, I'm sorry, there is no prepayment penalty, so you don't have to worry about, I'm going to refinance now and I have to, they're going to penalize me for refinancing. No, there is none.
Another key feature with FHA is to realize who you're buying from. If it's a family member or even a landlord, there's a item that we have to watch is called identity of interest. And then you have to have 15% down or 15% equity, depending on if the house is coming through a gift of equity. But because you know the seller, or maybe have been renting from the seller, they do have a feature that making sure that the price isn't overinflated or it's just called this identity of interest that they're saying you've known about this property. We want you to have more equity, more skin in the game. But again, if it's family member, maybe a gift of equity, could be an option.
Yeah.
Other than that, the program is a very good program. It's an easy program to work with. I know some people shy away from it, or, if you're working with a realtor, they might say, oh, you have FHA and, things like that. But it's nothing to worry about as long as the property is in the condition and that we need it to be, and you've already qualified for it based on all of the information. It's an easy program to work with. We're here to walk you through all of it.
And if you're not sure of what you need or what's going to work best for you, we love appointments where we can sit down and talk to you or, do a phone call. We can do a virtual appointment and go through the different programs and help you, understand them better so you can choose the right one for you.
Another thing too, and with some of our other programs also, but this one does allow for seller to pay your closing cost up to 6%. So you can also ask the seller, will they be willing to give you a seller concession to pay for your closing cost and prepaids? So they would help you with that, and then you only have to come in with the down payment itself, or even if maybe we have a down payment assistance program that we're helping you with, and you might not have to come in with almost no money down if we have all of these extra things that we can bundle together for you.
So it's good to have the experts on your side, right?
Yes.
Because you guys know those programs and what's available, and all of you can help our members or folks looking to get a home understand what their options are, what might be out there. There might be some things that they could learn from all of you that would help them really save a bundle.
Mm-hmm.
That's right.
Like Carrie said,
nice.
Don't be afraid to give us a call or set up an appointment. We don't have to start an application immediately. We can talk through some of these options, or maybe you know where your credit is at. We can give you those options. That's why we're here. We're here to help you and want to put you in a house.
Excellent. Awesome. Well, thank you all very much for your time and expertise on this topic. Are there any other final thoughts that you'd like to share with our listeners?
No, just give us a call and we can go over anything with you and put you into your right program for you.
Excellent. Well, thank you all again for your time, and thank you to our listeners for joining us today and listening and tuning into our podcast. Remember, all of you listeners, if you have questions about home loans, home equity, FHA loans, or anything really about the home buying process, feel free to reach out to us. We'd love to hear from you. You can contact us via email, homeloans@unitedone.org, and we'd love to highlight your question or questions in a future podcast. And if you like what we're doing, we encourage you to give us a like and rate us wherever you get your podcasts, and feel free to share our podcast with others. So you're welcome to follow us on social media. For Facebook, we can be found at Facebook.com/UnitedOneCU, and on Instagram with @UnitedOneCU. We look forward to having you join us again next time, and thank you all very much for tuning in.
Thank you. Have a good day.
Thank you.
Thanks.